You have gotten a point where you no need to assume say everybody know what you know. Do you get? Let's say you are in a general group of forex traders now. You don't need to be calling grammar because you don't know where I learn from. Me, I don't know where you learn from. So it's always better we speak simple terms that everyone can understand and get along. So these candles are there wrong. So sorry. The red should be green. The green and red is better, Abby. I'm not gonna use my normal black and white when I'm not confused. So the basic things you need to know. I'm recording already. Good. The basic things you need to know in forex is just your trend. Your bullish trend is always in this form. This one should be black. That's your bullish markets. Ranging, what's it called? Sorry, impulsive push, small correction, impulse correction, impulse to the upside. That's your bullish market. Then your bearish market should do the reverse, impulse correction, impulse correction, like that. Then your ranging market is sideways, which we hardly trade a ranging market. We hardly trade a ranging market. So this one now is your trend, your bullish trend here. So let me add this to Jesus. This is your bullish market. This is your bearish market. And this is your range. This one is sideways. So this one is your ranging market. So now the very basis of forex, once you can identify your trend, you know it's bullish, you know it's bearish. Then this one, the next thing is your point of entry, of which I told those who work with just 4 candles here. Just 4 candles. Limit yourself to 4 candles. And the 1 is your doji. And your 2 engulfing, hammer, which is your inverted hammer or your normal hammer. Then you have your evening or morning star. Evening/morning star candle formation. Then the last one is your engulfing candle. That's 3. Then the fourth one is your engulfing. I don't mind the spelling of engulfing candle. So these are your point of entry. The first thing is identify your trend. Bullish, bearish range. Then the next thing is identify your, what's it called, your how do you call this thing? Your point of entry. So once you can identify these on, then you know how best to engage. So what's it called? Small practical. Good. So if you see this market now, this space where I did for my screen currently now. Good. All these while the market has been bearish. Should they say I'm having?
Yes.
Good. This one now, the trend has been clearly bearish. How do we know it's been dropping? On a clear bearish market. So how do you mark the zones? And let's go to the extreme. It's from here now. You can see all these parts to it. Market came down, came up, came down again, came up, came down again, came up, came down. That's the bearish markets. See this one here too. The same thing here. Came down, came up, down again, up, down again, up, down again, up. Like that. Bearish markets. So the market has been bearish. This place too. This place too. That was a bearish market as well. Are we following? But
Yes.
this current market structure, now that they want turn bullish for a while. It might not be long term, but the current structure now. Hey, mute, abeg. So the current structure now is bullish. So that's how you identify your trend. If you are, what's it called, bearish, bullish, or whatever. So how do you know when to trade? You need to see two impulsive push to the upside for your bullish markets. For your bullish market, you need to see your first push. One, correction, two. Like once you can see two impulses, one, two. Once you can see two, the trend is valid already. Then what do? You look for your candles. Are we getting it? Once you can see your, what's it called? One, even like this, check where the market came from. Check the origin of that first push. If you can see any of these candles here, that would be your point of entry. Same for your bearish, same for your, what's it called? Your bearish market. Once market drop, impulsive push, small correction, impulse again. Check where this market came from. This place where the market come from. So check this origin of that first push. If you see any of those candles there, what's it called? You take your trades there. So this one is the structural mapping of the lower time frame. We'll talk time frame combination probably from now. Once you don't fix the time, you let me know more. Teach the this one are just simple whatever. So let's talk now. Sorry, I've done the structural mapping now. So let's talk about that 3-day candle stuff I've been doing. Well, now that one I'm only showing that this morning. So for that 3-day candle stuff I told us is your basic, what was it called? Your evening and morning star candle. Your first criteria is you need to see a thick candle. You need to see a thick candle. You mark the candle high. You mark the candle low. Mark the candle low. Once this one, maybe your day, on your daily chart. Once you see this thing, you mark the high, mark the low. Then you wait for a doji to form either above or below. If your doji forms above, okay, then you know the next days will be a bearish run. Then let's say your T candle formed, your doji now formed below. Then you know your, what's it called? The next trading day would be bullish. Do we have any question on this? Huh? Any question on this?
No.
Okay, Safira Alpha.
I don't have any question.
Okay, you understand. B Alpha, you follow.
Yes, I'm following.
Okay, I'll be say justice there. It's like justice Alpha.
Good.
Okay, so now let's go to what was it called? Uh, come in. Let me open a new tab. Let's work with yes, since I want to have okay. Let's work with German 14. Where is it? Okay, good. So let's do I need 5 minutes. 15, 10, 15, 21, 2, 3, 6, 7, 8 hours. Now see the features when they premium trading view. All these time frames are locked on the free version that we all use. Good. So now let's go to the daily chart now. The check now. Prior to this time, this market has been bearish. Would they say I'm happy?
Yeah.
But then getting to this point now, we saw a sharp reversal. But that's not our concern. You can see here now, this was a T candle. This one is not a proper doji, so we don't trade. But this one is a doji, so we can consider this one. But let's work with this one first. So now we had this tick candle here. Mute, they worry me. So we had this tick candle here. So you can mark that one as a high. Same time, mark this one now as a low. And if you can see properly now, what's it called? The doji formed below. So on the split market now, we go. On the split market, we go for these guys. From what I showed us in the other, from what I showed us in the other listing, see candle, a doji form, we expect buy. So now let's replay this price action now. Let's see. Come in, buy, replay. Good. Come in. That's how I do this thing now. Okay. So now we have what's it called? The red candle now. The other ones they never form. It's gone too fast. I'm coming. Let's do 5 seconds. Let's go again. Yeah, let's see. Good. So now we had this one. We had this one on the first day, which was on Friday. Then Monday now created this low. Then once you've seen this stuff on the daily, when I mute now, guys, you mute is disturbing. Once you've seen once you've seen this thing on the daily now, from that time frame combination chart, your daily time frame is to be paired with your H1 chart. I'll show on everything more. So from daily now, once you've seen your T candle now, you've seen your doji now, you switch to H1. You are switching to H1 now to look for that structure mapping, which is your impulse, correction, impulse, and either of those candles at the extreme. So we did H1 now. What do we do? If you check the H1 properly, okay, this one not too clear. I found that precaritation. But if you check this thing properly, market, so you can call this one your impulsive push. This one is not so clear. No, impulsive push, Abi. The sell is your correction. Impulse again, correction. Abi? That's that. Then if you check the origin, now what can you see? This candle is inside, but this one is a nice doji candle. Very nice doji candle. So you mark the doji candle now. Mark the high of the doji and the low as your point of entry. So now you anticipate price will come back, tap here, and go and hit your TP, which is your target. These are not too clear. No, let's just replay price. So let's see. Okay, let's go. This is not the play as I wanted. Want to read some chat. Okay, they're very slow. Three. Okay. This one not go well. I'm coming. This one didn't go well. Let's work with this German. What was it called? Your stats there, abi? Are you coming? Wait. Okay, let's work with your statement. And that one behavior. I'm coming. Let me check. BTC did the same thing yesterday, so no, I'm coming. I guess in the game, obviously. Okay, sorry, I'm coming, sorry. I me fuck up at the call, sorry, I've got the call. Let me clear this thing. I fucked up. I used the wrong time frame for this stuff. I'm coming. Okay, so sorry. I did this stuff on the weekly charts, not the daily. But the same thing. This is a T candle. This is a T candle high. This was the low. This was the low. So now we've seen this picture before. Once a doji forms below, you anticipate higher prices. So how do we engage on this? This is now your D1, your D2. How do we engage on this D3 now? So now let's replay price. So this one now will be exchange targets. Targets. Okay. So we can see the thick candle now. So you wait till you see the, what's it called? The doji forming. So now let's go. Okay. They say I'm happy. Now the doji now don't form below. So from here now you switch to your, what's it called? Your lower time frame. 4 hour D1. Now let's work with H1 for this one. Mm. H1 will give you better picture. Good. So if you check it now, if you come to your lower time frame, your H1 now, you see this impulsive push now, correction already happened already. Look at the extreme, your doji candle there already. But let's push it a little first. We'll see the next candle then go form. So be very slow. Good. Exactly. So what I told us earlier now, impulsive push, correction, impulse, and the extreme, you look for your candles. Neither happen already for you. So if you check it now, we have our impulsive push. This thing go down now. Hi. Impulsive push here. Correction already happened already. So are we getting it? So you can pick this high now as your first TP. Anyone you feel like, no, wahala. Then check the extreme now. What candle can you identify there? What candle can you see? We have a clean doji candle here before this impulsive push. You mark that doji candle now as your point of entry. That's the doji candle there as your point of entry. So you pick your buy limit to here long position to you place it there. SL always be like, told us take 1 to 4, but most see this one go eat because take 1 to 4, take 1 to 4, take 1 to 5 and leave. Then you continue. Let's see what price we do. So this is a push, impulsive push. The correction leg now don't complete when you place your limits because you need to see what's it called, these impulsive. If you go to your line charts, you see the stuff properly there. You go to your line charts. Go to line chart, you see that stuff well there. See am here. Impulsive push, correction, impulse. You don't complete already. Then your candle as point of entry is there too. So let's continue. Descends. Hein. Did you follow the class? Huh?
Yes.
Safira, you understand anything? Nero,
Yes, I do. Yes.
Nero, Alpha.
Yeah, I deal with you. I deal with you.
You understand
I
now
get
to an extent now.
Yeah.
So you don't really need to mark plenty, what's it called? Fair value gap, other block, plenty English. You don't need them. Safra, you don't note your mistakes, Abi?
Yes.
Good. Then let's check BTC. I think BTC played the same thing yesterday. So I don't want to stress myself much. Now let's walk through BTC too. Because we have how many minutes left for this class? I have like 3 minutes. Sorry, make I use another system. Coinbase. Okay, so the same thing. Daily chart. The same thing. Market has been bearish. Market has been bearish. Getting to the other day now, we saw this tick candle here. See tick candle, this one, okay. We'll run this one maybe tomorrow class, not today, or maybe later in the evening. Now you had this tick candle here. You give me this thing. Look, you see the tick candle low. This is a tick candle's high. Immediately this one closed inside in all counts. Now the one when sweep this tick candles low, close inside count. Once you've seen this in form for down, you already know you are anticipating what's it called a bullish market. Once it doesn't happen for daily or this thing finish, what do? You switch to H1, but let's do our replay stuff now. Okay, so let's go. Once this one form finish, you switch to H1. So you need to see your impulse, correction impulse before you mark your point of entry. So now let's go. Let me take it slow. So the impulsive push now. So we need to see the correction leg now. If you pick this one self as your impulse correction impulse, no wahala is good. So let's continue. Let's see what price wants to do. Okay, good. Fine. Would they say I'm happy? What am I showing us? Impulsive push, correction, impulse. Once you just see this thing form finish, the trend is clearly bullish already. Then look at the extreme. This one be like hammer candle now. We can see now, abi na inverted hammer I call, I don't know. But just mark this low and extend as your point of entry. That's it. Then you place your, what's it called? Place your buy limits or buy position to, hey, we'll get 1 minute, but no, let's go. Yeah, allow us finish this one, then we're good. Take 1 to 4. If you want OTTP, no, now carry and go 1. So that's it. Then you continue. Can we see?